Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for the segment, we have Barry Metzger, Head of Trading and Education at Charles Schwab, to discuss results from the Schwab second quarter Trader Sentiment Survey, which is a quarterly study that explores the outlooks, expectations, and trading perspectives of traders at Schwab and TD Ameritrade. Barry, it's great to see you again. Welcome to Trade Talks.
Thanks, Jill. Great to see you as well.
What type of outlook do traders have on the market, and do they feel it's a good time to invest?
Well, this time around, our traders are definitely more bearish than they were in past quarters. And, clearly inflation is the hot topic right now for many of our traders. I would say it's inflation, the geopolitical landscape, and just in general, wondering what the markets are going to do given the volatility. So to answer your question, is a good time to invest. I think our traders are always looking for opportunities. They're always going to be engaged, and they're always going to use education, the tools they have to make good investing decisions. But given the environment right now, probably a little bit of a steeper learning curve. They're probably being a little bit more cautious about their investment decisions, given these trends that we're seeing recently.
Do they expect a correction?
They're not necessarily looking at a correction, but they're really trying to keep an eye on inflation. It was interesting. What we learned in the survey is that our clients have different outlooks on how long we're going to be in this inflationary period. About a third of them think this latest round of inflation could last as long as into 2024, where 2/3 of it have a little bit more of a short-term horizon on it. So I wouldn't necessarily say that they're talking correction, but they definitely have their minds on inflation and the effects that could have on the market.
I also noticed that there were differences in the outlook based on life stage. Younger investors seem to be a little bit more confident.
Yeah, if you've been into the markets for a long time and you've seen different rounds of this, whether it was 2000 or 2008 or these different cycles, more experienced investors have seen this. They can have more of a longer term view and act accordingly in terms of their overall financial goals. If you're newer to these markets and you have a little bit more of a short term and trading mentality, it's a little bit more hard to understand exactly what could happen next. Could be a little bit more cautious or potentially look for other opportunities. But definitely our clients who have been seeing these cycles more and more have a little bit more of I would say, a little more comfortable handle on what the markets are providing us right now.
And they're most concerned about geopolitical risk and inflation, as you had mentioned. How are they hedging against those two things?
Well, I would say cash, gold, crypto, REITs. Those are definitely the areas that we're seeing. A lot of our clients look at and they're looking for opportunities in those sectors. But they're also looking at other sectors too that, have been more typical, like healthcare. So, but primarily we have seen more cash and more gold and more crypto, and real estate has been certainly something that we've seen an uptick on.
What sectors are they most bullish and bearish on?
Well, in terms of bullish, I would say utilities, materials, healthcare. So I would say over half on all those categories, utilities leading the way. In terms of bearish, some of the things that you would probably expect, IT, communications. But, if I look at more of a thematic level, our clients are really bullish on cybersecurity, defense contracting, automated, and then, bearish, I would say bearish on automated cars and space economy. So you're definitely seeing a little bit of shifts based on the last survey, which makes sense given the conditions that we're seeing.
Well, of course, if geopolitics is one of their larger concerns, it's all coming back to cyber at the end of the day, and of course, defense spending. So it certainly is in line with their thinking. Was there anything in the survey about their outlook as we look beyond Q2?
Yeah, when it comes to the outlook and you look at the market expectations of our clients, a lot of wondering about the Fed. We did this survey. A lot of expectations in terms of rising rates. Really, they were looking at a 25 basis points increase, but that's at the time of the survey. I think if we did the survey now, probably we'd see some different answers in terms of what our clients would see, what the Fed would do, and the decisions that the Fed does in terms of the outlooks of the market. But, I would say that in general, even though that there is more of a bearish feel this time around from our clients, in terms of going forward, it's really mixed in terms of what clients think the markets are going to do, which, like I said at the beginning, is all the more reason to stay engaged and stay educated and really think through how to definitely make those next investment decisions based on the conditions that we're seeing.
Yeah, I'll look forward to seeing the next survey for sure to see how the responses have changed, if at all. All right, Barry, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thanks, Jill.